is Nur Alia AINISA binti AZMAN. In this video, we are going to explain about basis of Malaysia income tax system. First thing first, what is the definition of tax? Tax is a compulsory financial charge or some other types levy imposed on a taxpayer by a government organisation in order to fund government spending and various public expenditures. In the simplest way of explanation, tax is a monetary burden laid upon individuals or property owners to support the government.
Hi, my name is AINUL NISHA. Okay, today I would like to explain about the objective of taxation. The main purpose of taxation is to raise revenue to make huge public expenditure. Most governmental activities were financed by taxation. In Section 3 of Income Tax Act 1967, a tax shall be charged for each year of assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside Malaysia. Okay, the meanings of accruing in is to earn or right to receive. Okay, income from particular sources can be earned and received in the same period. Okay, in Section 3B, an offshore company in respect of offshore business activity is not chargeable to income tax. I will explain about scope of charge as a general. Okay, we have three bases, which is derived and remittance basis, world scope basis, and territorial basis. In derived and remittance basis, income derived in that country and overseas income received in that country will be taxable. Okay, for world scope basis, any income derived from that country or overseas will be taxable. It's most specialized for resident company in business. Okay, for territorial basis, only income derived in that country will taxable.
Assalamualaikum, my name is SITI binti ISMAIL. So now I would like to present about types of taxation. As we all know, taxation have two types, direct tax and indirect tax. So what is the difference between direct tax and indirect tax? Direct tax is paid directly to the government and controlled by Inland Revenue Board. So example for the direct tax is income tax, stamp duty, and real property gain tax. While indirect tax is paid to the third party who given to the government and controlled by Royal Custom and Excise Department. So example for indirect tax is import and export duty, excess duty, goods and services tax. Next, we go to the classes of income. In the section 4, the income upon which tax is chargeable on a person with a resident or non-resident. They have 6 classes of income in the section 4 as you can see on the table. Section 4, paragraph A is profit from the business. B is a profit from the employment, such as bonus. C is interest, dividend, or discount. D is rent, royalty, or premium. E, pension, annuity, or other periodical payment. And the last section for paragraph F is other profit, means profit that derive from leisure and pay to the non-resident person. Besides, we also have a special classes of income. Section 4A, the income of a person non-resident in Malaysia should be chargeable to tax. They have 3 special classes of income in the section 4A, as you can see on the table. Section 4A, paragraph 1 is a service rendered in connection with the use of property or right or the installation or operation of plant and machinery. Section 4A, paragraph 2 is technical advice, assistance, or service rendered in connection with technical management or administration. Last but not least, Section 4A, paragraph 3 is about rent or other payment for the use of any movable property.
Next, what is basis period, basis year, and year of assessment? Basis year or basis period is an income that assessed on current year basis. Meanwhile, the year of assessment is the year coinciding with calendar year. Basis period for a company is normally the financial year ending in that particular year of assessment. All income of persons or other than a company are assessed on a calendar year basis. Last but not least is chargeable person. Chargeable person is the person who derive income from Malaysia and will be accessible and chargeable to the tax. Section 2 of the Act defines person to include a company, a body of person, a limited liability partnership, and also corporation sole. On the other hand, body of person is further defined as unincorporated body of person means that not being a company, including a Hindu joint family, but excluding a partnership. In the case of partnership, it is the individual partner who will be assessed to tax. Examples of body of persons are club, trade, association, and cooperative societies. All of these are the chargeable person to pay the income tax in Malaysia. That's all from us. Thank you for watching.